It's Thursday afternoon, and every second Thursday we get a visit from personal finance expert Mary Holm. She joins me now. Hi there, Mary.
Hi, Jesse.
And letters. You get letters. You get stacks and stacks
Oh,
of
look.
letters.
Yes. And, I keep on, you and I, every now and then, like to try and get away from the fact that the share market's not doing very well in the last few months. But I get so many letters to my column and sent through from you of people worrying that I thought perhaps we'd better do another session on. We've got, I think, four letters here
Yeah.
um,
And mostly
of
people
different
are
worries.
expressing a bit of dismay and shock that their KiwiSaver balances are going down, and they might be thinking,
Yes.
Mary, you told me to get into KiwiSaver. Are
Yes.
you about to retract your advice? So should we go through them, and hopefully among these four letters, other people listening will get some of their questions answered as well.
Yes. Sounds
Carol.
good.
Carol complains that her conservative fund is not so conservative. She had a real estate sale and she invested $725,000 in a BNZ conservative fund. She chose it because she's risk averse and she had just 5 years before turning 65. That sounds pretty sensible. The person who interviewed me
Yes.
explained their fee structure, said Carol, but indicated I would still be better off than a low interest term deposit. But the increases have never been what I was led to expect. And now, 2.5 years later, my account has gone down below the original sum. Am I losing out because their fees are unusually high? I've got just 2.5 years before I can receive a pension, and I'm seriously worried that I'm in the wrong KiwiSaver option. Can Mary please help me with some advice?
Yes. Now, firstly, no, the fees are not high. BNZ, to its great credit and somewhat to my surprise, I have to say, lowered its KiwiSaver fees not long ago. I think less than a year ago, and so it's among the low fee providers now. So it's not a problem with fees. The problem that Carol's got is that it's an unusual period for conservative funds. And a lot of people are saying, hey, I'm in a conservative fund with whatever provider, and it's going down.
Yeah,
And I think part of the trouble is the name conservative makes people think they're in the lowest risk fund of all.
yeah,
But in fact, there's a whole category of funds that are called by sorted and so on called defensive funds, which are the very low risk ones. And the providers sometimes call them cash funds. And they are where people should be if they really don't want to see their account balance ever drop. When I was having a look at the BNZ fund returns, sure enough, over the last year, they've been really quite seriously negative. And that's unusual. It's basically because interest rates have risen, and that means that the funds that are stuck with bonds, which are usually conservative, low risk kind of investments,
yeah,
but most of the funds are sort of stuck with old bonds that are now paying relatively low interest compared with the newly issued ones.
yeah.
And so they're not worth as much. And that gets reflected in negative returns for conservative and middle risk sort of funds. And it's fairly unusual what's going on right now. See the one Carol's in, for example, is 55% bonds, 20% shares too. The conservative funds, sometimes have a fair few shares, and then the other 25% is cash. But the fees are low. I would say to Carol that she could move her money to the BNZ's cash fund, which is their truly low risk fund, which holds only cash and won't go down, or it shouldn't. And it'd be very, very unusual for it to go down. And if so, it wouldn't go down very much at all. The trouble with doing that right now is she's kind of making her losses real. So
Yeah.
she might want to just move some of it down to the cash fund, and leave some of it where it is. So she's kind of a half and half situation. The conservative fund will recover, but it might take a year or two to
Yeah, but
get back to positive
she's got two and a
returns.
half years to go. So I guess all she wants is reassurance that over that 5 year period she's going to be up, and that it would be very, according to your
Yes.
expertise, it would be very, very unusual if she was down after 5 years.
It would. It would. There's certainly no guarantees, but it'd be very surprising. What she's got to keep in mind as well is she's got a lot of money in there. She's got 725,000, which is way more than most people, and we've got to assume she's not going to spend all of that right as soon as she turns 65. She might, if because she said she had a real estate sale. So if she were interested in buying another piece of property, she could be spending it all in a lump sum. But most people in retirement are spending, a little bit at the beginning and then gradually over the years. So quite a lot of that money might be, she might be not spending for 10 or 20 years. So she might just hang about and things should turn positive. And the trouble is, I can't say when. They could continue on negative for another 6 months, another year even, but on the other hand, they might turn positive fairly soon.
Yeah.
So if she's really panicking, she could move at least some of it to the BNZ cash fund. But if she can hang in there, she'll probably in the long run be better off.
Yeah. Okay, thank you. That's hopefully useful for you, Carol. Heather wants to know if it's a good time to switch funds. She switched her KiwiSaver from conservative to balanced at the end of May, and she's heard now would be a good time to have more money in shares than cash. The balanced fund has 50% shares, and the conservative fund had 30%. She says she's unlikely to need this money in the next 5 years. Within a week of doing the switch, by the way, the value of her fund dropped by 2.4%. She says, I imagine the best thing to do is stay in the balanced fund and keep calm. She's obviously heard some of your advice over the years, Mary. Should I have stayed in the conservative fund and waited before switching to balanced? Is there a good time to switch? There is advice on switching providers, but there's not so much on switching between fund types, such as from conservative to balanced to growth.
Yeah, look, they're two different types of switching, obviously. And just very briefly, if you're switching providers but staying at the same risk level, it's fine to do that in any market. It doesn't make any difference whether it's a good or bad market, you're doing that. But when you're switching fund types, that's when you can sort of make a bad move if the market timing's wrong. With Heather, I would say she's best to just stay put. It's not good to reduce risk in a downturn, but it's fine to increase risk as she's done. It's actually that sort of contrarian investing, and that's what she's been referring to, where she said she's heard it's quite a good time to have more money in shares than cash. So there will be more ups and downs. So she's moved from conservative to balanced, and it sounds as though she could possibly be even considering moving to higher risk than that. And
it does sound a little bit like she's trying to time the market, though, Mary, which you always sort of advise against.
Absolutely, yeah, and she could regret it. If she moves to higher risk now and then the markets keep going down, she's going to wish she hadn't. But if she is thinking of moving to higher risk and leaving it there, in other words, she's not planning to spend the money for 10 years or more, and I don't think we've got any indication that she is, then she could go ahead and get even braver. She's got to, though, promise that she isn't going to start panicking when the markets next go down, because they will. We just don't know when.
Thank you. I'm talking to Mary Holm, addressing some people's concerns about KiwiSaver today. This is another letter, and the writer says, I'm 62 and I'm on a benefit due to illness. My fixed costs are already slightly more than my income, so I'm financially stressed. I have just enough in my KiwiSaver to pay off my mortgage, and without mortgage payments, I could afford to eat. I'm hanging out for retirement so I can action this plan, especially as I'm worried that my KiwiSaver balance is about to tank. It's currently in mixed, growth and conservative. Is there any way I can cash out my retirement savings early? And if I could, should I?
No, yeah, I feel for this person because they're on a benefit, and so life's probably not financially very easy. You can't get your money out early, even though this person is 62 and they'll be able to get access to their money when they're 65, can't get it out early unless you're in really dire financial straits. And I don't recommend taking that on unless you really have to. They look at all your bank accounts and all your spending, and it's not at all easy to get money out because you're in financial trouble. This person, their balance probably has fallen. They wrote a couple of months back actually, and the balance probably has gone down since then. So I would say to that person, if you're planning to use all your KiwiSaver money in 3 years, and it sounds as though they might because they're wanting to pay off their mortgage, it probably is a good idea to move to a lower risk fund right now, even though you're sort of locking in the losses you have probably been making because you're in mixed growth and conservative in your growth fund anyway. Possibly also in your conservatives, as we were saying earlier, they've been going down lately as well. If this person's nervous about it and they just think, I really want to know where I stand, even though if they hung in there, probably almost certainly in the next 3 years, their balance will go back up again, but it might not. It's so hard to say. I sometimes say to people, do it half and half. If you're really nervous about it, move half of it to a low risk fund and leave half of it where it is and hope that that does recover. By the way, this person said who their provider was, and I decided not to broadcast that, but that particular provider does not have a true cash fund. So you need to go, if you really want a fund that invests only in cash, so it won't move at all in down markets, go onto the Smart Investor tool, which is on the Sorted website, and look for defensive funds. And within that category, look at the ones that have the word cash in their name. And even then, some of them aren't pure cash. So you want to then click on the fund information and have a look at what their investments are. So some of them are pure cash funds, and those are the really low risk ones if this person or anyone else wants that. But, I might, on the other hand, they might be able to just hang in there and hope it goes back up again. And I'm just saying, in this situation, thinking what I might do, I might say, let's hope the money in my KiwiSaver does start growing again, and perhaps set yourself a goal. Say, when it gets back up to where it was at the beginning of this year or whatever, then I'm going to move it to a cash fund so that they're not moving it at the very worst time. It's a hard one, Jessie, though, because this person's stuck in a position where we simply don't know what's happening, and I wish I could give them more reassurance than I can.
I think that's pretty good advice what you're giving them. Yeah, and you did have a note on their provider as well.
Yes, your particular provider does charge high fees. So I would recommend, regardless of anything else, having a look on Smart Investor and looking at the lower fee funds at the same risk level, because you're paying high fees and not necessarily getting anything more for your money.
Great.
So that's something you could do that would help your returns along a bit.
Definitely.
Yeah.
Okay, one more letter now on KiwiSaver, and this comes from Gerald. And he says, Mary always recommends to everyone to join KiwiSaver. Not quite true, but I'm sure Mary will address that. Anyway, experts tell us frequently that the national super system, as we know it, is unsustainable in the long term. I'm not sure if anyone's said that definitively either. But anyway, if the government runs short of money to support pensioners in the future, will people who saved for their retirement have the money which they receive from pension funds deducted from national super? And if so, will Mary still advise people to be in KiwiSaver funds?
Yeah, and this is something I hear every now and then. People worry that if they've saved a lot in KiwiSaver or elsewhere, that at some point they'll get less New Zealand super because they've got big savings, whereas other people who haven't bothered to save or haven't been able to save can cruise along on super. And look, there's no way anyone can tell you what a future government will do. And nobody can guarantee that. But when you think about it, this is a democracy. A government's not going to do something that really hurts a heck of a lot of people and makes people who saved worse off or even equal to people who didn't save. Because think of the message that sends to the young people at the time. If the 20-year-olds are hearing their parents and grandparents saying, oh, look, if I hadn't bothered to save, I'd be just as well off, then they wouldn't bother to save. Of course they wouldn't. And so it's just not rational to think that a government would make people worse off or even equal with those who have saved, so those who have saved should always be better off than those who haven't. It's a terribly disempowering thing a message to send to New Zealanders that, oh, don't bother to save, the government will look after you. To some extent, I think New Zealand governments always will. New Zealand super will not disappear. When Gerald says the experts say it's unsustainable, but that's not true. It might, the rate might reduce, the annual increases might not be quite as big as they are now. Currently, the increases are match wage increases, and they might sort of slow that down a bit. But if you go and look at on the Treasury website and look at Treasury's research on this, we're not in nearly as bad a plight as some people think we are. And in any case, regardless of all of that, people who have saved, I'm sure, are going to always be better off than people who haven't.
This is a great session, Mary, and I hope that you've reassured some people out there. Very unusual for Conservative funds to be dropping, and that's a combination of what's happening with the bonds and what's happening with the share market. And I think it will have, as you say, given people a bit of a fright, people who thought that their money was never going to go down if they were in a Conservative fund. I guess this is a lesson people will remember and will be instructive for choosing a fund in the future.
It's not unusual for a Conservative fund to go down a bit, to wobble around a little bit. I mean, partly because they do tend to have some shares, but also bonds, do react to changes in interest rates. But they've gone down quite a lot, and that is unusual. And so, if you really, really can't cope with that, think about moving, but hopefully hang in for a while until the markets recover a bit, and then move at least some of your money to a very low risk KiwiSaver cash fund.
Thank you for your analysis. Great to have you on as always, Mary Holm. Catch you next time.
Thanks, Jesse.